I welcome you all back to this channel again. Welcome back to KinFX Academy YouTube channel. As you all know, my name is Akinla Kin. I am the lead instructor. So guys, I'm giving you a strategy that helps to grow small accounts to bigger one. And this strategy is one of my best strategy trading volatility 75. If you are trading volatility 75 and you come across this video, I congratulate you. And if you are thinking of started trading volatility 75 and you see this video, I congratulate you also because with this strategy you will be able to make a lot of money in the market trading volatility 75. We don't need much for this strategy. It's just some little some indicators like that. You understand? So we are going to need RXI and some moving average with one MACD. So how do we combine all these indicators to form the great strategy we are talking about? So you just have to follow me to the end of this video. So if you are using only this strategy throughout this year, trading flat lessons 5, I promise you at the end of the year, you will be one of the best traders that make a lot of money out of the market. You understand? So what you need now is just to click on this. On the main chart, click on the F plus, then let's find the RSI, relative strength index. So um you need it as the default setting. The only thing you are going to change here is the level. So put it at 9010. You understand? So after that, then change the style to the background color of your chart because we don't really need the RSI. So we only need it to house our indicator to accommodate our the remaining indicators. You understand? Then click on done. After you have done that, if you go back to the main chart, you should be able to see your RSI empty like this. Then go back there again. Then click on indicator window 1. Click on the F plus in front of the indicator window 1. Then now we are looking for MACD. So this MACD is going to be the first setting. Then you can change all this color if you like. Then click on done after that. So you should have something like this on your chart. So the last one on the indicator window is going to be our moving average. Click on the F plus in front of the indicator window 1 again, then come to moving average. The moving average we need is going to be period 2. It's going to be period 2, shift 0, method exponential. So in this apply, we are going to apply to the previous indicator, which is the MACD data. That is what we are going to use for this moving average. So we are going to apply to previous indicators data. You understand? So then click on done after that. So you should have something like this. The indicator is almost complete. So you have to listen attentively, yes. So you don't have to rush or jump into conclusion. You understand? You may have seen some similar things, but just calm down and follow the video to the end so that you won't have your money to pay for this. It's just time now. Just use your time to get the word information before jumping to conclusion or before starting using the indicator. So now we see that inside the indicator window, we have the MACD and the moving average. The MACD is the red, while the moving average is the black. So, you know, when we are thinking of buying, you understand, we all know that when the crosses happens here, we should go for buy, and when the crosses happens here, we should go for sell. So how do we know that the signal is valid? That is one of the major issue every beginners face, even not only beginners, most traders face, because the indicator may give you a signal, but how do you confirm that indicator is a valid one? You understand? So go back to the where we add indicators. On in front of the main chart, click on the F plot. Then we need the moving average again. The moving average we are using now is 26. Leave it like this. You can change the color if you wish, then click on done. Go back to the chart. Now we have our moving average. Now, if you are thinking of sell, first of all, don't forget the time frame we are using in M15, which is 15-minute time frame. The reason why for 15 minutes time frame is just to get a long time signal. You understand? But any signal you get, even if it is one in a day, is going to give you a lot of money. You know, if you go to 1 minute time frame or 5 minute time frame, you are going to see multiple signals, but it may not stay long before it change. You know, trend change easily on the smaller time frame, 1 minute time frame. You understand? So a lot of things don't last there. Even patterns don't last. So, but when we use 15 minutes time frame, any signal we get here is going to be a very valid one and that we work for a long time. Now, what are the things to consider before jumping into a trade? Like you see on the chart now, you can see that the moving average is in between the candle. This is not a good idea to trade. You understand? Instead, watch when the market is trending. That is, when the market is trending down or trending up. Now the market is trending down. When the market is trending down, what you'll be looking for is the cross of the MACD and the moving average at the overbought level of the RSI. You know, the RSI has the 90 level and the 10 level. When this moving average comes to the 90 level, it says that the market is overbought, and when they come to the 10 level, it said that the market is oversold. So you'll be waiting for the market to come to the overbought when the market is in downtrend. You know, that is just going to be the retracement. You understand? You have already dictated by yourself with the moving average that the market is actually in downtrend, but you need a retracement to bring the price, the moving average, the MACD and the moving average to the overbought of the RSI. So once we have that information, wait for the cross. Once you confirm the cross between the two moving average, then go for sell. And you know that the candle, the 26 moving average on the main chart is above the candle. That is a very good signal for you to trade. So when you enter the trade, where your stop loss is going to be? That is the major question. You can say we got the signal here. This is a cross, which means that this candle give us the signal. So your stop loss is going to be above the immediate high or low. If you are selling, immediate high. If you are buying, immediate low. So your stop loss should be above here. Then you can target 1:3 of your risk. 1:3 is okay. One ratio, that is times 3 of what you are risking. You understand? So you can see that all these ones now is an invalid signal because the moving average is trading down while the indicators, the MACD and the moving average in the indicator window are giving you a signal to buy. You understand? And it's just for a retracement. So that is why we need this moving average. So another one, so you can see that, so we have confirmed that the moving average is down and we see this cross. That is a good sell for us. So this gives us the signal. So this gives us the signal here. So the stop loss is going to be here. Then you are going to target 1:3. So let's look for buy. Let's check the buy example. So here now you can see the market is moving up. Then we see the cross in here. So which means that we have our entry somewhere around there. The stop loss is going to be here, just below the immediate low. You understand? That is all. If you follow this video to the end, I congratulate you once again. You understand? Just go to your account, go to your demo account first, backtest the video, demo trade it, and the strategy rather, demo trade it. You understand? So you will know the good thing inside this strategy. You have to calm down and back and demo trade it before you put your money on it. The strategy is very effective. It's very good in growing small account into a bigger one. You understand? So just like share this video, and if you are new to this channel, please don't forget to subscribe. You understand? So I wish you happy trading and always trade responsible.